Training session. It's Jitan Solanki here again. Pleasure to be here. And what an interesting week we've had. Not a lot has happened, considering the volatility we've had since the beginning of the year. But this was to be expected. For those of you who were listening last week, we had a game plan, and it executed very well over this past week, and it's something I want to share with you over the next 45 minutes or so. Also, want to look into some of the fundamental developments that have been happening over the past week, as well as the typical seasonal technical analysis. So first of all, let's have a recap, okay? And what you'll see here in black, the comments there are the comments that we made last week during the live trading session, and the blue comments are ones that I've added to this week. This is very important that we understand what our analysis was a week before, and whether or not it continues to be the same for the coming week, and how we can improve it, and if any common themes are still apparent, or if the actual whole climate has changed. So on the 19th of Jan, we were talking about that markets were not moving on good fundamentals. We had some decent data out from the Eurozone, but the euro was just not moving based on that good data. Well, why is that? Well, we already know that the markets have been retracing, profit taking due to the extreme volatilities that we've had, and obviously we're moving into the FOMC announcement tomorrow. So we already picked out the fact that the markets probably over the last week would be quite range based and would be retracing, and the positioning is key. We talked about last week, because the markets were going to be range based after such strong moves. We have to focus our strategies on the market conditions. So again, trading breakouts probably not the best strategy to trade whilst the markets are retracing or being range based. Really, it's the liquidity plays that you want to be trading, and I'm going to show you a couple of examples of those as we progress on. So the markets are still a bit range based. If you just look at the euro dollar, you can clearly see it's going sideways, and it's really been the market just to trade the tops and bottoms of people's stops. We talked about how the fact that volatility has hurt some people, so they're on the sidelines, which is why we haven't experienced any significant swings in the market over the past week. We also talked about unwinding of positions after such great runs. And again, we've seen that over the past week, with the markets retracing rather than breaking and continuing in their original directions. So how did this help us? Well, we talked about having an intraday focus. And I put up a couple of currency pairs there for you guys to look at, on focusing on running stops in a low liquidity environment. So we're looking at dollar and dollar yen. And I'm just going to jump to the chart and show you some examples of those. So if we just start with pound against the US dollar, you can clearly see here, this is just a daily chart. Last week we talked about on the 19th of January that on this day, the best type of strategy to trade right now are liquidity runs or stop runs, i.e. it's not the environment to trade breakouts. You want to be doing the opposite of the breakout. Okay, that's what a liquidity run is, or a stop run is. So we experienced that. Instead of most people would see this bearish engulfing candle or bar and think, okay, great, we've got further downside. But again, if you understand the market condition you're in, many of you would have been looking to buy this breakout instead of selling it, okay? Because that's the current market condition climate that we're in. And we have some beautiful runs on here. You can see it took out the low. So all your retail traders who would still think that the market is going to break lower and continue in its volatile movement were caught offside. However, those of you tuned in last week, we would have been on the other side looking to buy this, and we had a decent run up here. Again, we've had the same thing today as well. In bearish inside bar, many people would be looking to sell on the break of the low. It's just an easy trap for professional traders to come in and buy those stops off the retail guys. Okay, so we understood and we planned for the fact that the market was most likely going to be like this over the past week, and it set up beautifully within that. In terms of actual entries into these trades, of course, you can't just buy the break. You've got to look for your price action setups. Yeah. So the market breaks lower here, and then it stalls. Low test, doji, low test. The market stalls, clearly telling us that actually, there's maybe not that many sellers in the market. Now they come back in. All right. You either get it on the retrace here at this previous high, take a long position. That's fine. Okay. Any way you guys want to play it. But it's about analyzing what the market is doing. Let's have a look at euro against the US dollar. So again, our focus was to run stops in a low liquidity environment. If we can see here, today was a beautiful example of the fact that we just took out the stops of yesterday's and the previous day, Friday's high. And if you look at down on 30-minute chart, we beautifully came into those levels and we put in this high test pin bar reversal for the short position. Again, trapping the retail traders who are still trying to try breaks after such strong volatile markets when the markets have changed, right? You've got to learn to adapt. You've got to learn to try and forecast what the sentiment is, and how people are positioned, right? We've got FOMC tomorrow, so clearly most people will be profit taking and looking to go flat into that announcement of whether they will or will not do the second interest rate hike. And again, I'm going to go over that in a little while, and how we can position ourselves accordingly over the coming week based on that announcement. So that was a euro dollar. We also had some great plays on dollar yen. You can see on dollar yen, if I just take it up to a daily chart, again, it's come into this support level, and many people will be looking to trade the break. But think about the news that is coming out in the market. Think about how everyone is positioned and think about the trend. Okay. We were looking to buy into this break and we were rewarded with the market rallying just a little bit higher. All right. And however you want to play this, you can clearly see, this is just screaming out to you. Big seller bar followed by a big bullish engulfing bar, right? Again, risk on that is slightly big. You wait for your retrace and you get in somewhere on these lows and you trade it up until the next recent high, all right? So again, dollar yen, and what you have to remember is that I'm not necessarily saying that now the markets are going to start changing their original direction. Okay, the fundamental picture hasn't changed, but again, it's all about market positioning, right? Understanding what the market is doing right now and how to profit over the next coming week or so. Also took a trade on pound New Zealand. This is one that I was focused on based on the seasonal patterns, as well as the fundamental patterns for that trading day. And the trade was here. First of all, you can see the market here took out the highs, came back in the range, it sold off. Bit aggressive entry there. But again, here's the lower high. Here's the liquidity run here, and that's the trade. For those of you who want to know about that trade in a little bit more detail, there's a long video on our blog which goes on how we traded pound New Zealand, the reasons why, and the entry criteria. Okay, so have a look at that, and you'll get a further insight in terms of why we took that. Okay, so with those kind of plays right now, pound New Zealand, I'm not really looking to do anything with it. It's just going sideways. We've got potential pound strength coming in, and New Zealand dollar. People probably want to start profit taking because they also have an interest rate news announcement tomorrow as well, same time just after the FOMC. So we could see some profit taking in the Kiwi pairs. So we could see a little bit of a further rally higher here, right? But nonetheless, it's not something that's typically on the watch list right now. Right. So those were the intraday focus on the running stops in the and liquidity. Let's have a look at some of the end of day plays. Okay. So again, we talked about last week our end of day focus. We're going to focus on the structural retracements. Prices are retracing. We can see that. We forecasted that. However, we've got to be careful. Do we want to get in on that first bounce? back in with the trend, or do we want to wait for some type of structural retracement, i.e., either a 3-wave ABC retrace for people who follow Elliott wave, or your more complex 5-wave retracement? So just have a look at some of these yen pairs, because those ones have been retracing the best. So, if we look at pound against the Japanese yen, so, the market has retraced and played this inside bar. And again, we forecasted that these retracements were likely to happen. And I said, personally, I wouldn't be looking to trade the short straight away, because most of your retail traders will be getting into that short position, right? And generally, as the retail traders go, the market tends to do the opposite, right? Purely because of how the market is positioned. You've got to think to yourself, the people who sold at 190, it's now down at 164. I mean, they're going to start profit taking at some point. For them to liquidate their short positions, they're going to be buying your long stops, all right, your buy stops. Okay, so even though the market did come into this, so it came into the support level here, okay, this multi-year low, wouldn't necessarily buy it off that, but you've got to expect people to start profit taking. I mean, look at this drop, right? You don't really see that often in the FX markets. It's great when they do, but people are going to want to start profit taking from this. So trading this bearish inside bar short position is a little bit too aggressive for me. I would rather wait for the 3-wave retracement, as we talked about last week. So I'll be looking for the first move higher. I'll be looking for the second move lower, which shouldn't take out this low here. Then the next leg higher, so you complete your ABC retrace, and I'll be looking to get in short either the 20, or if it does go higher, at the 50. Yeah. Again, would I take this position long? Potentially I would. That's where the market is positioned right now. I mean, there's no setup right now. But I will be looking to buy into these 3-wave retracements and trade in the B2C leg, purely because that's where the market is positioned, right? So I would obviously be careful with trading some of these short in terms of trend continuations, especially with the FOMC tomorrow. That's what we're looking to do on pound yen. If we look at some of the commodity crosses on the yen pairs, for example, look at Aussie yen. Again, it did most retail traders would have tried to sell the break here. Okay, it's gone up, it's come down. Most people would try to sell that break. However, it's a trap. Okay, look how far the market has come. Puts in this big low test bar. Again, if you weren't positioned short or long here, based on these liquidity runs, then you may have even taken a long position based on this low test bar here, because more often than not, it's going to want to go and test these stop losses here. So now the market is finding resistance at the 20 moving average, and again, I'm just waiting. If this bar here ends like this at the end of the day, and then tomorrow, if this fails, then I'll be looking to initiate short positions again, right? So just being careful after extreme periods of volatility. You can't expect that to continue. You've got to take a step back and just be a little bit more cautious. Okay. And again, for a lot of people, after such volatile runs, you may have had a really, really good run. And even in those type of scenarios, you should take a break, or you should at least reduce your position size, just so you don't get too greedy. And you don't think you're invincible because, hey, everything's been going right for you. For those of you who have been stuck in the volatility and been on the wrong side of it and had a not so great period, well then, of course, you definitely need to take a break and obviously reduce your position size to get that confidence back up, right? And once you've got the confidence back up, then you can start trading again. Personally, I've had a very good run, and this is why I'm trading at reduced stake. So even a trade I took today on New Zealand CAD. Again, why am I trading New Zealand CAD? Well, we can see Canadian dollar CAD first of all was the trigger. We can see that dollar CAD failed at these highs. I couldn't take a short position here because I wasn't in front of my screen. Okay, however, I did want to get long on Canadian dollar, right? So this is dollar CAD coming down. And this is Canadian dollar going up. So I do want to get long Canadian dollar. How could I play it? Well, I looked at some of the cross pairs, and New Zealand CAD was really the only pair that I saw that really hadn't triggered. So this was the trade. This is the trade I took today. It's failing at these highs here, so simply just took a ring high short here, and just ran it to the lows. Again, half a stake. It's not the £1,800 we made last week on pound New Zealand, but nonetheless, it's just a small stake just to get back into it, because I actually had a weekend in Barcelona on the Friday and yesterday. So again, just got to get a feel for the markets again after a short break. So those were the focus on the intraday running stops in those low liquidity environments after such strong volatility. Again, the end of day plays, as we talked about Aussie yen and dollar yen. If we look at New Zealand yen, for example. So New Zealand yen is of interest. Again, run the stops here, ran a bit higher. Now it's put in this bearish engulfing bar here, which would have enticed obviously a lot of retail traders to sell it short. This is going to be an interesting one. We've got the New Zealand interest rate announcement on Thursday, and you've got to remember this whole volatility started in the commodity sector, right? It was oil, it was all the commodities, sugar, wheat, all those commodities started the volatility, and it spilled over into equities, into some of the other cross pairs as well. So that's going to be a big one to watch out for tomorrow evening. So I'm not really positioning myself straight away in the run up to that. However, if the market stayed like this today, and if tomorrow the stops were run on the highs and then it started to move lower to take up this low, I would probably start to initiate a short position, because then that would be a key point where all the retail sellers would have been flushed, and the professionals would have started to come in. Of course, if we start taking out highs and taking out this engulfing highs, I would really wait until really needing the 50 moving average or the 79 handle before initiating a short position again. So the game plan worked out fairly well for the past week. And I would still say you've got to watch the bounce in stocks versus the euro. The markets are in such a highly correlated mode right now. You've got to be careful trading multiple assets, but also you can also provide valuable insight if you do look at what's happening in the equity markets and commodity markets, because that is having a major effect on the currency movements as well. So the game plan worked pretty well, and what I want to focus on now is, what's the game plan for the next week or so. All right, we know what has been working and what hasn't been working. So let's see if that will continue over the next week. So in order to do that, let's first focus on the fundamental analysis. What's been happening basically. Well, as I just said, the markets are highly, highly correlated right now. And what we're seeing is that when oil rallies, so oil rallied this morning, as you'll know, dollar CAD is falling. So Canadian dollar's going up because oil's going up. So oil rallied this morning on the comments from Iraq that they're willing to cut the output if other oil-producing nations will do so as well, which is basically to stem the oversupply of oil in the market, which has caused the oil market to crash. So generally what we're seeing is that if oil is going up, then that means equities are going up, which means euro is going down, Canadian dollar is going up. And again, we're seeing this correlation, the fact that when equities go up, euro is going down because of the search for yield, right? More people want to make more money. They'll go into the stock market because of the ECB is still willing to do quantitative easing, right? So that's the general correlation that we're finding right now. And it's an important one to know, especially if you're a multi-asset class trader as well. But again, the keys are in the headlines. We've also had Bank of England Governor Carney testify to lawmakers today, and some key significant quotes came out of that, and specifically the fact that he's stating that the conditions are not in place for a UK rate hike. And we've been a long-term bear off the British pound. I still think there's some movement left in it. Of course, you've got to think about the market positioning. Markets don't move in a straight line the whole time, so we are due a little bit of a rally, but with no interest rate hike on the front line, we do have more bearishness, especially with the whole Brexit and the vote coming up on whether the UK is going to stay in the EU or not. So that's really kept the pound depressed, and we foresee the fact that the pound will continue to be depressed for a while. So, really focusing on the pound crosses. We also had, Bank of Japan, where there were some rumors flying around last week that they were going to intervene in the markets, and there were just rumors at the end of the day, and you have to understand that they are just rumors. But generally, we had some quotes from the economic finance minister, Amari, just basically saying that they can take the appropriate steps if needed, but they're not going to be as bold as the ECB. So that's just probably flatten the expectations. But again, it's something to definitely watch out for on the yen pairs. Now, as I said, we've got FOMC tomorrow. So they're not expected to hike rates given what's happening in the global backdrop. But the forecast on the street is the fact that a rate hike is probable in June. So we have to bear that in mind with the US dollar, especially in the current backdrop of global volatility. We're experiencing a flight to safety in gold. So gold's been rallying. We haven't seen that much in US dollar as a safe haven. So dollar Swiss, it's been grinding higher a little bit, but not as much as you would expect given the global backdrop. That could potentially change if volatility does continue, and depending on what the FOMC say tomorrow. So I would certainly look at that. New Zealand rate hike tomorrow is obviously one to watch. The volatility started in commodities. We know the ECB are willing to do more quantitative easing if they need to, but we've had positive data out from the Eurozone. So it is a bit of a mixed theme with the Euro right now, which is why it's just bouncing back and forth in the channel, because it's just susceptible to what's happening in the cross pairs. So, Euro Oz, Euro New Zealand, for example. So, the markets aren't trading to a theme just yet because of the profit taking and short covering that we've been experiencing. They're waiting for direction from, let's say, the Federal Reserve tomorrow, because that's the most significant news item on the calendar this week. So that's the kind of the fundamental focus. A little bit more mixed than, say, last week, for example, where we had specific news announcements coming out, specific things being said by key people, and price action reacting or not reacting based on those news announcements. This week is a bit more of a mixed picture. So again, it's a time just to preserve your profits and play the game a little bit more carefully than you would, let's say, last week. So just want to have a look at the seasonal bias again. So we know from the seasonal bias, so the monthly averages, that pound continues to be depressed up until about April, which is what we've been experiencing. But we do have that commodity rally in April sometime. Up until then, I think we've just got to wait for those three or 5 wave retraces in the commodity currencies. Also look at the news announcements with the Fed and the New Zealand dollar tomorrow, just to give a little bit more direction. But I think now most of the fundamental trades have played out in terms of expectation of what the Fed is likely to do, and the British pound and things like that. So because that expectation is already priced in due to the volatility we've had, we also have to be a little bit careful of really kind of continuing with the trend and really look for those structural trades. So that's going to be really, really important. So just as a recap before we have a look at some of the charts again, so markets are retracing and wait for the structure. We've got to wait for the fundamental theme before trend continuation. On the intraday basis, we want to trade the retraces until failure. And end of day, look for those focus on the structural retracement. So if we just have a look at the charts very quickly from an intraday perspective, I'm looking for long positions on the US dollar Swiss franc. You can see here that the market put in this ascending triangle formation. So we had this resistance level here. Oops, let's draw that in again. So we had the resistance level here, and we had the series of higher lows. So we had this ascending triangle. The market has broken through, and it's come down to retest it. So this was a beautiful buy zone here in the morning. A little bit too early for me to take here, but nonetheless, there was a great trade there at the European session just before the UK Open. So from an intraday perspective, still looking for long positions. Again, it's a little bit rich right now in terms of where it's bounced off the 20 moving average. But still be looking for a long position on dollar Swiss. In terms of euro, if I just look at some of the other dollar pairs, so you can see a lot of the dollar pairs, US dollar against the Danish kroner, seem to be exhibiting bullish tones, if you will. US dollar against the Mexican peso looks a bit negative here based on commodity prices going higher. But US dollar against the Polish zloty as well, that looks to be going higher as well. So a general theme of dollar strength is coming into the markets. If we look at it from the short side, we can see that the euro dollar, I mean, it's just going sideways. But if we look at it, we can see that most people, we talked about last week that most people want to be long, or most people fundamentally want to be short the euro dollar, but actually most people are looking to go long based on the technical picture, which is why the market is another reason why the market has been so range based. But the market has really just struggled to break these highs here. Really, just there's a zone here, and if the market is just struggling to break here, we've come back down below the moving averages, and we've just taken out all these highs here, and all these stops of people buying. So, looking at the technical picture, sometimes you have to change with the wind, right? I was looking for some bullishness. I actually took a long position here, based on the fact we bounced off this key support level down here, 1.05, had an ABC retrace. This looked like to be a higher low ring low pattern. It took a long position. It failed on the first day. Tried to move high on the second day. Failed again. Inside bar. Failed again. I'm out. Right. It's just not really. It doesn't look bullish, and it just looks like it's a waste of money to be in that trade. I'd rather use my money to put into something else that's going to move a bit quicker. So now it's retesting those lows. Actually, interestingly, so there's 1, 2, 3 bars is retesting those lows. So the bias for me is on the downside right now. But that would also mean a rise or a rally in stock markets, because that's what we've seen in terms of the correlations. And if the stock market is going to rise, that means oil is going to rise as well. So it will be interesting to start looking at the comments of oil producing nations to see if they're going to side with Iraq and stem the oversupply. But it's going to be very, very difficult without getting into conspiracy theories. The US government, it's really in their interest for oil prices to be very, very low, because the lower oil prices are, the less money that terror groups like ISIL are making, right? Because they control a significant amount of oil fields and are making about $500 million a month from oil prices. So again, there's a lot of things, geopolitical things in play as well. But from a technical point of view, the reward to risk here stacks up. Obviously, we have FOMC, and if we take a trade on euro to the short side, there is a risk that we could be stopped out tomorrow because of the volatility. Nonetheless, if we do get a run to the downside, well then it's really a free market until it goes down to at least test these lows here. So that would be quite significant. The reward to risk stacks up on that side. All right. Look at some of the euro crosses, in fact. So the euro crosses also are looking a little bit bearish in terms of they want to come down for a three-wave retrace. Euro Oz, to me, it's just really, really mixed right now. Potentially, there's some buy zones coming up around the 50 moving average here. But potentially the 200, which will give it a nice ABC retrace into those levels. But we'll have to see how that one plays out. EuroCAD. Well, EuroCAD could be a very interesting one to play based on the oil prices, because this chart tends to move quite a bit. But if we look at the weekly chart, you can see that we've just ran into these multi-year highs, and we just blew the roof off it and went straight into the next resistance level here. Now, looking at this chart, we've got this bearish engulfing on the weekly chart, which is quite significant. So in my book, it will at least want to run down and test the lows here. Yeah. So test the lows of 1.5 to about 1.52 really. So right now where we are, that is another 180 odd pips or so, right? So there is room to move here on this chart. Now, if it does take out that low, I'm not so sure we're going to see a massive run lower. Obviously, we could do, but the highest probability trade right now, from a short-term perspective, is the fact that it would want to go and test this low here. Yeah, based on this bearish engulfing pattern, and based on the fact that a lot of people would have sold at market here, and there'll be a lot of sell stops in the order book at this level here. Right, so I would be looking to trade it short up until that level, and then just seeing how it reacts at that level, and maybe try and get a run to the weekly 20. But we'll have to see how that one plays out. Euro pound. Well, if we look at Euro pound, for me, it's just in a holding formation. I would see more bearishness in Euro pound, considering the fact that a lot of the expectation in pound is probably already built in terms of the interest rates. However, Brexit is another issue to contend with, but I would at least see a run up to this 0.75% level, okay, based on this formation here. So it's definitely something to look out for on Euro CAD and Euro Pound. If we look at Euro Yen, it's just really going sideways for me. There's not really a lot to do here. However, if we do get a run up to these lows, the 20 or the 50 or 130, we'll be looking to potentially sell into those levels there. If we look at Euro New Zealand, which could be interesting because of the New Zealand dollar interest rate announcement tomorrow, I'm flat on this. I don't really have a bias compared to Euro CAD and Euro Pound, which just look a little bit better. All right. So my focus would be on Euro CAD, Euro Pound, and watching those pairs. In terms of British pound against the US dollar, well, from a weekly perspective, we have run into support here, but there is a lot more support to go, and it may just want to go and test these levels here. However, over the coming week, I would expect that we would at least want to go and test this high, last week's high, okay, at 1.43, about 1.4370, right, which gives it about 120 odd pips from where we are now. We haven't tested a weekly high for 1, 2, 3, 4, 5, nearly 7 weeks, right? So there's going to be a lot of stop losses that are built up on these highs here. So I would like to see a potential trade. If I see a trade to potentially trade it up to those highs, I would see how the market reacts. Maybe it'll just run up a little bit higher, but then we'll be in wait and see mode at that level in terms of whether we want to sell into that level or buy the break off that level. Now, we have put in a low test bar here today. Obviously, we've got key news announcements tomorrow, but potentially we could see some bullishness up until that 1.4370 level, which is here. Okay, just to run those stops as we talked about at the very beginning. But in terms of pound US, well, eh, in terms of the cross pairs, we did take a short position here. We added certain short positions. If pound is going to rally, and what I don't like to see if I'm short is the fact that this low stopped pretty much on the dot of this closing price here is a bullish sign. So we could potentially get a higher low. And it could, if this high low does work out, it could easily take out this high here, right? However, my initial analysis was to see a pound dollars to go to 2, but we've got to adapt with the market and the technical pattern we've seen. However, for pound also go higher, that would be the commodity weakness as well, which on oil prices we're not just seeing right now. So the markets are a little bit mixed, and I would be careful trading some of the cross pairs in this mixed environment. It's not the same as it was last week when the theme was a little bit more clearer. Okay. However, I think the CAD theme seems to be a little bit clearer with oil prices potentially bottoming around this period of time from a seasonal point of view as well. So looking at pound CAD, we can see similar kind of setup to Euro CAD in the fact it's failed at these multi-year highs, and given the move last week, it may just want to test last week's low. So if it went to test last week's low from an intraday, from an end of day point of view, there's not much in it, but from an intraday perspective, there's a good few hundred odd pips in that move lower. Again, what I'll be looking for over the next few days is from an intraday time frame, from a 1 hour chart or a 10-minute chart, perhaps looking for the market to rally higher and fail in order to initiate those short positions. So really the CAD pairs is going to be the focus for me over the next week or so. Looking at Aussie CAD, that was quite interesting actually, because if we look at Aussie CAD, it ran into this high here. So let's put a level there. Ran into that resistance level. It failed with the bearish engulfing. Again, it's not a trade that I took, but the lower high, it just came up to test it, but it didn't really set up any type of bearish signal here. But now it started to move off. This is the first opportunity that buyers have had to buy into this potential bounce, but it looks like it's being sold off. So we could get some bearishness here, at least up into this previous low or the 50 moving average, which gives it a decent reward to risk on an intraday time frame. So that's something that I'll be looking at over the coming week. So really where the CAD pairs probably where the action is going to be, especially FOMC tomorrow. It's going to be heavily affect the Canadian dollar and oil prices. So there's just something to focus on over the coming week or so. What else have we got? So that is really the main focus for what we have now. A little bit lighter than usual, purely because of the retracements and the range-based markets we've had, and the market's not really following the any type of theme overall right now. But that is the focus. So as a recap, we'll be looking for markets to retrace, wait for those structural retracements, those 3-wave and 5-wave retracements from an intraday perspective, looking to trade the retracements intraday until they fail. What I mean by that is trading within that ABC pattern until those markets fail. I particularly like the look of Canadian cross pairs. It looks potentially like the oil market may want to bottom. And if the Fed is dovish in their sentiment, then we could easily see that. So I would be looking at the CAD pairs as a main focus. So looking at Euro CAD, Aussie CAD, New Zealand CAD, Pound CAD for potential short positions, so Canadian dollar strength. From an end of day point of view, I'm in wait and see mode as we wait for more of the structural retracements to take place. However, we do need to watch the Fed and New Zealand announcement this week and how the stock market and oil market react to that. That would be very, very key in determining what is likely to happen over the next week and coming months. Okay, so And that's it from me, ladies and gentlemen. Hope you enjoyed today's live training session. If you have any questions, please post them up. I'll be more than happy to answer them. Otherwise, I wish you a very profitable trading week. Keep it conservative, keep it focused, and I'll see you next time. Thanks for now.